Everyone. Thanks for joining. I'm going to hand it over to Nimaj. Nimaj is one of our business credit coaches here at NAV, and he just has a wealth of knowledge about all things running your business, particularly helping you find the right credit and financing for your business. So with that, Nimaj, take it away.
All right, good afternoon, everybody. Today we are going to have a conversation about bookkeeping. I'm really excited because it's tax season, and we know a lot of business owners at this time are either going to feel prepared or slightly panicked. So oftentimes the thing that determines which category you fall into is how prepared you are with your books. So our agenda is going to cover what bookkeeping really is and what it isn't, how bookkeeping can really make your tax process a lot smoother and save you some money at the same time, and how to set up a very simple system that you can use repeatedly. So it's all about usage and making sure that you have something that you can stick to. So that's really important. Why does bookkeeping matter? Your taxes are not something that you want to guess about. If your books are messy, it gives you opportunity to miss deductions. And if you miss deductions, that means you may pay more in taxes. You may overpay, right? You can also end up having higher fees with your CPA because they have a lot more work to do to be able to reconcile or get things on the right track. Your taxes are created from your actual bookkeeping. So we'll get into it later in the webinar, but your bookkeeping creates some very key financial statements that you're going to be able to use to get insights on your company. Clean books equals faster filing. So you won't have to be panicked, like I stated earlier, if you have everything clean, ready to go, and you understand what your actual books are saying about your company. Fewer surprises, and it also supports your funding readiness. As a coach, I always, bring home the point that you should always have insight into how your business is performing, because that is often how you're judged when you're ready for growth and ready for funding. So what is good bookkeeping? So these are all of the four core elements of good bookkeeping. You want to make sure that you track all of your income. Okay. So all income is different. There's going to be some income that comes in different formats, whether it's cash, whether it's electronic transfer, and from different, clients that you may have. So tracking your income allows you to record all dollars that come in that your business earns. So your income is what ends up creating what's called your gross profit, a very important part of your profit and loss statement. You want to categorize your expenses correctly. So if you don't have the right idea as to what expenses that you have, and you miscategorize them, or you don't have your bank connected to your bookkeeping software, like all of your bank accounts, you end up missing expenses, which ends up also causing you to miss deductions. So ultimately, you want to make sure that you're paying the appropriate amount of money in taxes and making sure that everything is accordingly. Keeping your records and receipts, so verifying all of your transactions. So that's one of the things that I'm most excited about bookkeeping. So the goal of this is not to turn you into an accountant, but to really turn you into a business owner with more insight and awareness as to where your money is going and how it's being made. And lastly, you want to review this regularly. So if you catch issues early, you can make more informed decisions. So this is an opportunity to be a more informed business owner, which is going to lead to your financial success and also your success in being able to grow and eventually seek funding, which, includes business credit. So you don't need to be an accountant to do bookkeeping. So that's great news. And simplicity and consistency is the main thing. So what do your books actually do? So a bookkeeper or your books show what happened, and then an accountant is going to take that information, compile it into financial statements, and then that data and that information is being interpreted. So that tells you what happened and what that means for your business. Are you profitable? Are you losing money? What areas do you need to get on top of as a business owner? So good news for everybody on this call. Our financial statements come from bookkeeping, and NAV's bookkeeping software allows you to be able to create these in a very simple and frictionless way. So your profit and loss statement, this is absolutely most important. So I've coached, thousands of business owners, and helped business owners secure financing in my career. And a profit and loss statement is a judgment as to is your business actually profitable? A lot of times business owners, we think that because we're busy, we have activity that we're actually making money. But when you take a look at, well, how much money did I bring in, right? What are my sales? What is my gross profit? If you have cost of goods or what is my cost of goods sold? What expenses did I incur to actually operate the business? And then that bottom line is your net profit or net operating income, NOI. So that is the snapshot that shows you, how well you're doing and then where you need to cut back or maybe where you need to increase to be able to get to the outcome that you desire. The balance sheet sometimes is required, oftentimes, especially when you're looking for financing that is going to be a little bit more than a credit card. Well, I'll just keep it simple and say that. The balance sheet is a snapshot of your business assets and liabilities and owner's equity. So what you own versus what you owe at that particular time that you run the report. So your accountant is going to need these because this information is what creates your tax return. So step one, separate business and personal finances. I can't drive this home, even more. I always talk to business owners in conversation about making sure that you separate your personal finances from your business. You have a personal bank account. You should also have a business bank account. And all of the income that you receive should be coming to your business bank account. So when you mix finances, this can cause a lot of stress. If you're, for one, when you do your bookkeeping, you have to think about all of the transactions that you have to go through, and you're sifting through to be able to code them properly or reconcile them. So if you have a lot of personal transactions, those actually get in the way of telling the truth, the real story on, your profit and loss statement. So when you have clean finances and those are separated, it makes it operationally easier for you to navigate your books and do your reconciling, and it makes it easier for your CPA on the other end. So having a business checking account, commingling, that's the big C word, right? So commingling is when you're mixing the two. You don't want to do that because a lot of times as a business owner, you're in business to have that separation. So oftentimes people say, hey, I want to have that separation between myself and the company. I want to do things that are EIN only. I want to have that. Well, if you have a LLC or you're a corporation, the more you commingle, then you're disproving that you are not the business. So separating that is going to be the first thing to do to make sure that you don't give yourself that room for exposure to where that can happen. So you want to maintain as much, or limit as much of the liability as you can. Business credit cards are great tools. I love business credit cards because they allow you to have a tool to use for operating expenses. It's short-term financing. So it gives you a chance to, really time your cash flow and take advantage of that to operate a little bit smoother. So if you run business transactions through a business credit card, great news. Those can also be synced up to your bookkeeping software and you can reconcile those as well. So it doesn't have to just be in your business bank account. All of your transactions, you have to explain what they are, when they occurred, and what the use case is. And we talked about EIN versus SSN in the sense that your EIN is your identification number for the business. So that is your business's identity number. And then your social security number is you as the person. Is that simple. So those numbers differentiate the two. Step two, choose a bookkeeping method. Spreadsheets. So spreadsheets are common. Oftentimes spreadsheets are very manual. So it can be, painstaking sometimes to have to go in manually and cell by cell or create formulas or load, or download CSV files and things like that into a spreadsheet. So one of the great things about it is that when you do this type of bookkeeping, you're forced to really be in the weeds and know the ins and outs and everything that's going on. The cons is the time that it takes. So if you're a busy business owner, time is everything. Time is money, as they say, right? So you want to start to move into automation, and that's where Nav comes in with our bookkeeping software. But there's other software out there that does a great job at being able to help you achieve this. As an example, QuickBooks and Wave, just to name a couple. Hiring a bookkeeper. So if you have a lot of transactions, you have a complex business model, you got a lot going on, you might have multiple businesses. Sometimes it's good to leverage the services of a bookkeeper. And the few dollars that you might pay them for their services is definitely going to outweigh you not having the time, you getting behind, you making mistakes, versus doing it yourself. On the flip side, if you have a less complicated business, you don't have a ton or a large volume of transactions, doing it yourself is always, the best way, and I highly recommend it. I'm a business owner as well. I like to do my books as soon as I have transactions that post. So what happens is I have a transaction on my business account, on my credit card. When those things post, I wake up every morning before I start. I reconcile my transactions. So I do my own bookkeeping. That way I don't get behind. So it's all about habit and consistency. What matters the most is consistency. Whichever tool you choose, you just need to do it regularly to get the best results. Step 3, track your income carefully. Deposits versus actual income. So this is really key to understand. I'll keep it at a high level. All money that comes in isn't actually income. Okay. So you have deposits, whether you got, $1,000 cash deposit from doing a job. You got a ACH from some consulting work or whatever you may have done. You had some retail transactions from, the cash register or whatever it is. But your income is going to be that minus whatever fees that you may have to receive the transaction sometimes. So you have to look at it as the money that's coming in versus what actually belongs to the company as a business. So when you're doing your books, you want to make sure that your income is always gross. So you want to think in gross terms, not net, because that can actually mess up your the taxes when it comes to how much you are expensing. Cash versus credit card payments. So I explained that, I touched on that briefly. So if you take a credit card payment, oftentimes there are fees. So if you take $1,000 credit card payment and there's a $30 fee, just round numbers, those fees become expenses, but you still want to capture that $1,000 as your actual gross income. Refunds or returns. So those things also lessen your income. So if a customer says, you know what, I'm not happy with your service, I'm going to dispute it or I'm going to return it. Those deductions lessen your income. So it's very important to stay on top of this so you're not overinflating your income or under-reporting your income, because accuracy is important. And keeping your income reports accurate is going to be your best thing. So accuracy, not necessarily to the penny, but you want to be in the position to where you're confident and comfortable with what you're submitting, because that is very important. That goes on your tax return and it's going to follow you throughout your business history. So just getting the habit of that. Step 4, you want to categorize your expenses correctly. So common expense categories, if you think about your income, right? So the different types of income that you may receive. You may have business insurance. So insurance is an expense category. You're going to have business phone. You may have company meals or things that you expense as well. Think about all of the things that your business actually spends its money on. There's going to be a matching category for it. And when you use bookkeeping software, they give you that. So they list out all of the common ones, and oftentimes you're able to edit it and make it more specific to your specific business. So what counts as a business expense versus a personal expense? So business expenses are always going to be what's customary, what's normal use, what's required for business. If the business didn't exist, would you still buy it? If the answer is no, then it's not a business expense. Personal expenses, I think we know what those are. So if use your business account to buy things from Amazon and you're buying, you bought a television for your living room. That's clearly a personal expense. So when it comes to your bookkeeping, you have to separate those two. And it goes back to the earlier slides when we talked about commingling. So to get more efficient books, and so you can do less work, you want to limit the mixing of personal and business related purchases. So that TV that you bought for your living room should do that in your personal account. So oftentimes business owners will say, well, how do I do that? I operate out of my business account. Well, you should make transfers, and those transfers essentially are what's called owner draws. So the money that you want to spend on Amazon to buy that television set, you transfer that to your personal account. That's going to make your books a lot cleaner, and it's going to give you much less stress and headache, especially if you're scrambling around tax time. So what this is important, what counts as a deductible expense? So the IRS, and I'm not a tax professional, so please consult with your CPA to get all of the final and most up to date numbers and statistics. But ultimately, there are certain things that you can deduct. And as an example, your home office. So it's not going to be what you pay for your entire rent or a mortgage payment or things like that. You can deduct a portion of the actual space that you have if it is a dedicated home office. Oftentimes it goes by square feet and things of that nature. Your business vehicle. So if you have a personal vehicle, you have to think about, okay, well, what percentage do I use for personal travel? What percentage do I use for business travel? So that's really key. So in bookkeeping, you can often split your transactions to where you can code the percentage they use for business, and that personal percentage would be considered owner's draw. So that way it wouldn't go into your expenses as actual business expense. So you only want to code or reconcile what is a true expense for your company. These deductions lower your tax liability. So you don't want to take advantage of it and do things in the wrong way. Subscriptions, marketing, and things like that often, aren't deductible expenses, but definitely talk to your tax professional to get guidance on how to go about that portion. Step 5, keeping receipts and records. So always have proof. You want to have proof, especially for those things that you're deducting, those things that can have sometimes blurry, ownership, whether it's personal or business. I give you a prime example, business meals. So oftentimes, you may have to take a client out for a lunch. You may, buy a lunch or dinner at a conference or things like that. You might have a team, outing. So those are going to be things that you want to really make sure that you take proper care of and making sure that you have the receipts. You can upload these receipts into your bookkeeping software. So NAV's bookkeeping software allows you to do so. We'll have a demo of that shortly. So digital versus paper. You can't go wrong either way, but you definitely want to make sure that you do things as digitally as much as possible, because automation, having access, it's easy to get these things to your CPA. You can get these things to your accountant on the fly, and that's just a more efficient way of record keeping. So just think about efficiency. So this whole thing about bookkeeping is being efficient and making sure that you have all of the information readily available so you don't have to stress. So these are just simple tools to stay organized, just to stay on top of all of your finances and having your receipts and records all in one place. Step 6, reconcile your accounts each month. So what does reconciling mean? So all it means is that each transaction that comes in, you assign it a category. So what happens is there is a thing called a chart of accounts. So the chart of accounts is essentially your business's general ledger, right? So there's going to be the entries in which are used to categorize what type of transactions that you have. So like your equipment or your income, your expenses, and on all of those things. So it's really important to pay attention to that so you can have that clarity in your financial statements. And you want to match your bank statements to your books. And you can do that every month. You can do it every week. You can do it every day. So it's really up to you. So you want to find what flow works the best for you. If you have a lot of transactions, it depends. You want to also carve out time for operational time, for admin time, whether that's, one day a week, block out a few hours so you can sit down and do this. So the most important time to start is now. So you want to start during the current tax year. That way you can get comfortable with it if this is something you don't naturally do, and then go back to years prior. So you'll get that satisfaction of being able to see, okay, how much money did I make and how much have I spent? If you really pay attention to reconciling your books, you'll be able to catch errors. So sometimes you may see a transaction that's coded improperly or the wrong dollar amount that was sent over. So these errors can, cloud your tax return and cause different issues. So just think about the time that you spend doing this is going to save you a lot of stress further down the road, especially during tax season. So common bookkeeping mistakes. Waiting until now to update your books. So again, this is an ongoing thing. So that way, when the tax time comes, April 15th, or if you file an extension, you'll probably file less extensions and you'll be more prepared. And then you'll have a much better relationship with your CPA and you'll save some money there too. Common bookkeeping mistakes number two is guessing expense categories. So you don't have to guess. The categories are actually, usually in your bookkeeping software that you use. And if there's something that is a little bit odd, you can always make sure that you adjust it so you know exactly what it is. And another thing outside of the expense categories, you can put in notes. So if you need to jog your memory as to what a specific transaction is that you just don't recognize it immediately, when you take a look at the notes, you say, oh, that's that subscription that I have. So making sure that you're not guessing and then you're using accuracy as much as possible. Don't ignore those small expenses, they add up. Parking is a great example. It might be a couple dollars here, $4 here, but the volume of parking charges that you might have equals a lot of money. And if you say, oh, it's just a couple bucks, I don't need to reconcile it, or I don't need to make sure that it's actually flows through my profit and loss statement, then you could be missing out on opportunities to lower your income. So you don't want to pay more taxes than you need to, but you also don't want to report your income or expenses either. So it's all about having the telling the truth and having the right balance. So forgetting about 1099s and sales tax. So that's a huge one. If you do a lot of 1099 work, that's income and you have to record that. So you want to make sure that you compile all of your 1099s together. So get a place to where you can track these digitally, and make sure that you don't forget about sales tax. Sales tax often is a thing that causes business owners a lot of problems. So I review business credit reports even to where they've had tax liens due to unpaid sales tax or state taxes or things, right? So those discrepancies or that oversight can haunt you in the long run. So the more emphasis you put on making sure things are right on the front end, then you'll be much more successful and have less stress and everything because it's like the domino effect. You knock one down and then they all fall. So you forgetting to pay sales tax, it might not do much for right now, but later when you apply for financing and that comes up, or you have a lien on your business or your company due to that, that's going to cause some issues. So just make sure that you really take this seriously, and we're going to show you how simple it actually is. So getting your books tax ready, a simple checklist. I want everybody to pay attention to this. All of these things are what you need to do. You want to record all your income, categorize all your expenses. That's simple. Store receipts. So again, especially those major receipts that can, be discretional, whether it's business or personal use, make sure that you keep those. Make sure that your bank accounts are reconciled. So if you have multiple bank accounts that you receive money into and that you have business expenses from, You want to make sure all of those are connected. That way you have the full picture as to what my business is bringing in and what's going out. And this is how you generate your financial statements. So this, the five-step checklist is what you need to have your books ready for tax season. So what if your books are behind or a little bit messy? We've all been guilty of having messy books or no books at all, right? So the books always exist. It's just a matter of sitting down and actually doing the work to make it meaningful, right? So just don't panic. So I always recommend that you start in the current tax year. So if you say, you know what, I'm a little new to bookkeeping, start with, there's no better time like the present. So we're in March, we're in the beginning of March. So that means January through March the 4th. Today on this webinar, you should be going back through all of your transactions and start the reconciling process. So start now. And it's going to feel good when you see, okay, this is how much money I made. Oftentimes I talk to business owners and I ask, well, hey, what have you grossed this year? Or what was your gross last year? Or are you on pace? Are you on pace to meet whatever goals that you have? And oftentimes it's uncertainty, right? So when you are on top of your books, you'll be able to see, okay, this year my business has made X amount of dollars. And you'll be able to say my business spent X amount of dollars and my actual net profit, what is mine, is this number. So you always have that insight when you start now. So focus on that, and then you can always go back and clean up the past. And if you have to hire a bookkeeper or pay a little bit more for your CPA to do some of this work, that's fine. But at least you know what to do moving forward. So always focus on accuracy, not perfection. It doesn't have to be perfect, but it needs to be accurate. That's the best advice. You'll know when to ask for professional help. If you're just overwhelmed, if it's just too much for you, you have a lot of transactions and you're behind, a few years if you haven't filed, or even the current tax year is just, a lot to manage, then don't be afraid to ask for help. Because oftentimes, if you get help and if that help happens to show you some things, you start doing it for yourself a little bit and then you'll get more comfortable. So it's all about repetitions and getting comfortable. How bookkeeping supports business growth. So if your books are clean, it's going to help with your taxes. It's going to help with building business credit. It's going to help you with loan and funding applications. So this is very important. So again, those financial statements that I talked about, profit and loss statement, balance sheet, lenders look at those. So they ask for that to be able to see, well, is this business profitable? Do they have the cash flow to be able to actually sustain new debt, take on new debt, or pay for their current expenses? So without having bookkeeping and you're asked for these, then you're scrambling again, right? So you always want to be in a position to where you're ready to take advantage of opportunity. And if you don't have books at all, or if your books are not clean, then it's going to set you back from being able to take advantage of opportunities. Building business credit. So it helps you qualify for, credit as well. So again, your financial statements, play a role into everything. If you're applying for a business credit card, a simple business credit card, you usually don't submit financial statements for that. But when you want to get that SBA loan, that SBA guarantee loan from the bank or whatever lender you work with, guarantee they're going to want that insight. So this will put you one step closer to that growth and that outcome that you're looking for. And then obviously your taxes. So again, your books, your financial statements that your bookkeeping produces is what you're handing to your tax preparer and CPA to be able to create. And depending on what you use, they may be able to plug into your bookkeeping software to create these things themselves from their own access. So it's the foundation for everything. So that's why bookkeeping is so important. It's your business's foundation and insight to, are you making money, or are you losing money? And we're all in business to make money. So that's why bookkeeping is important. When to outsource bookkeeping. So working with a bookkeeper or accountant. So if you're stressed, if you're just like, man, I just got thousands of transactions, I don't even know what this is anymore. You might need to sit down with somebody and go through it so they can understand what type of business that you have, what's normal for you, what's customary. And then that is going to be the gateway for you to be able to do better at doing it on your own. whether it's temporarily, just so you understand it. So I'm of the thought process, it's always good to have understanding of things that you're paying other service providers to do. So, NAV gives you the window to all of the information about your business, from your business credit report down to your financial statements, all the way down to what options that are out there that you may be eligible for to build your business credit. So sometimes it's a matter of what it saves you, not always what it costs. So the cost for outsourcing a bookkeeper may be a few $100s. It may be, that you pay per week. It may be a retainer. It depends on the model, but it's going to save you stress, headache. And if you don't do it or you have messy books, it's going to save you a lot of money with the IRS in the event that you get yourself into trouble. So you want to think about the longevity. So always think with a long-term mindset, and then that was what you come out. That's how you come out really clean in the end. So preparing before you hand off your books is making sure that your transactions are reconciled, everything matches up. And if you do that, it's that simple, then you'll be confident. All right, so NAV's bookkeeping tool. So what do we provide? So our NAV tool is called Cash Flow Health. So it provides you with all of your transactions. So in the overview tab, the reports is what shows that chart of accounts that I talked about. So your revenue, your sales, cost of goods, like the operating expenses, all of those things. The tools that we have produce profit and loss statements. They produce the balance sheet. They give you, all of the things that it will confidently allow you to present this to your CPA. A statement of cash flow, another, really strong um, um, financial statement that's used to measure, your cash flow at certain points. A lot of financial decisions for businesses are based off of cash flow. It's not always the business credit score, the business credit report. It's cash flow. Cash flow is king. So statement of cash flows will be able to show that. So some of the things that NAB is doing to, just give an even better experience is allowing you to group or reconcile similar transactions together, and the ability to upload those receipts that I talked about, and split transactions. So those things simplify your whole experience with taxes. Right. So going to skip past this video on how to do the bookkeeping, but we're going to go over to the wrap up. So key takeaways. It doesn't have to be complicated. It's not what you use, it's being consistent. NAV software allows you to be able to get key insight on how much money the company is bringing in. So what is your gross income for the tax period or time period that you set it for? And it gives you all of the financial reports. And we make it simple for you. You don't have to be an accountant. You just find a system that works. I love NAV system because it's simple. And you can connect your bank account through Plaid. You can connect your business credit cards if you have them, and every time you log into NAV, you have all of your info at all in one spot, from your credit scores down to your books. So you can manage it very simple and then start your day. A simple system beats no system. So if you have nothing, then you're putting yourself and your business at a disadvantage. So simplicity is key. Simplicity is key. Consistency over everything. So if you start being, really in tune with making sure that you stay on top of your transactions and reconciling them and coding your transactions, you'll start to get the hang of it and really feel good. So I don't know about you, but I feel good when I'm able to look at it and say, hey, you know what, this month I'm doing better than I was last month, or I'm very consistent. Consistency and income is key when it comes to funding and financing. So consistency is great. Is my business growing? Or on the flip side, if you aren't growing and you have more expenses than revenue, that's a problem there that you need to solve. So having that window to your info, having that insight is what this is all about. Nothing to be scared of, and it's very simple. Clean books make every tax season much easier. So the less time that you have to go back in time, the faster you can complete your taxes. So start with this tax year just to get the hang of it. Because in the first, couple months of the year, it's easier because you have less transactions than trying to clean up full 12 months, right? So start now, play around with it, get comfortable, and then go back the prior year if you haven't. And then that will help you if you, of course, if you haven't already filed your taxes from the previous tax year. So this is the perfect time to start because we're only 2 months in and you can't mess it up. That's the thing I like to tell people. When things are intimidating, oftentimes you can't mess it up. So, and if you do make a mistake, the system will show you that you're making a mistake or you'll realize it and then you can fix it. So it's the learning curve is or really up to you. So if you change your mindset, then you'll have the outcome that you're looking for. All right. So questions. Do we have any questions?
We do have one question in the chat, but do you want to do the video first?
Yeah, the video wasn't playing. Let's see if there's a way around it because that is important. Let's see here. All right, give me
We have a link in the chat. Try that.
okay. All right. All right, so this is a video example of our cash flow health tool. So as you can see, it shows you your revenue, your expenses. You can be able to see at a glance, how well am I doing? This shows you all of your, categories for the transactions. So whether you spent money on travel, other business expenses, your bank transactions, all of these things flow through the system to where at a glance you can see what your expenses are, which is really important. So this is what reconciling your transactions are. You see someone spent money on McDonald's, Office Depot. You can categorize all of these and choose which category they belong in. You can uncategorize them. So as you can see, you have full control over what needs to be reviewed and what things should be labeled as. So insurance premiums is business insurance. We're confirming those transactions. And once you get to see your confirmed transactions, you'll see the categories that they are belonging to. So you can split it. So if this was, 50% was business use, 50% is home use, then you can see you can do that. So that's the power of splitting your transactions and also uploading your receipts. If you had a business meal, that's a perfect one to prove. So you want to upload your screenshots or receipts. That way you can have it all in one place. So it's a team dinner and they spent $679, quite a bit, right? So that way you can confidently, present this to your tax professional because you have your proof. Also notice that you have the ability to search for transactions. So if you don't see something, but you know you spent money on something or you received some income, you can do that. And these reports give you the things that you need to create for your taxes. So your profit and loss and balance sheet. So this is what it's a snapshot of your income, your revenue, cost of goods, what you spent, and then actually what your bottom line is. So you can go through different dates, different time frames, so you can compare, and that's how you're able to judge your business growth. Balance sheet, again, statement of assets versus liabilities. So you can see what that looks like. What does your business own? Is it, heavy in cash? Does it have assets, physical assets? What are the receivables, the value of those? And your statement of cash flows is a great tool to be able to show your cash flow at any given time and period. So if you don't want to make sure that your account doesn't go below a certain level, you can also set those automations as well. So as you can see, the nav tool gives you a lot of options to be able to have that insight and control over your finances. All right, so we have some questions here.
We do. The first one is from Sharon. So she asks, what if you haven't made any money from the business yet, but you've just been spending money trying to scale the business?
All right. So thank you for asking that, Sharon. Great question. So you start the moment that your business spends money. Usually you're going to spend a dollar before you make a dollar. So there's no wrong time to start bookkeeping. So you want to keep track of your expenses because the moment that you do, then that becomes your revenue. And then you need to learn how to actually track your revenue and the different types of revenue that you may have coming in. So you want to use bookkeeping even if you haven't made money yet because it shows where your company is. Great question.
Yeah. And then I know, Zach, you maybe had something to add to around how expenses are used by the banks and lenders and creditors. Maybe we could talk about that.
Yeah, absolutely. Um, so yeah, in within the Nav platform itself, we do have a marketplace with business credit cards as well as loans, a few different options out there. But do look at your cash flow health in general. So it's not just your income; it's also where your money's going, how much of it. Um, so it's oh, sorry, is it still hard to hear me?
That's better.
Okay, perfect. Sorry about that. Um, but yeah, it's just very beneficial to record your business expenses, since creditors, lenders, vendors, all look at your cash flow health in general, not just the income. So even if all you have right now is expenses, it's still beneficial to kind of maintain that.
Yeah. Do you have anything to add there, Nimaj? Because you're always working with clients who may or may not have revenue. They might just be starting out looking to get credit and financing. Is there like a anything more you want to say about that link?
Well, it's always important to know where you are because, for one, just from a motivation standpoint, if I look at my books, if I just look at my business health and say, you know what, I'm spending a lot of money, I haven't made any money. Maybe I need to go back to the drawing board. Maybe I need to figure out another means or customer acquisition channel or a way that I can, maybe spend less to earn more, right? So you want to use the data to help you make better decisions. So data allows you to make a better decision as a business, and that's the most important thing. When it comes to financing, oftentimes, talked about this earlier, but your net profit is going to be super important. So as a former SBA lender, I worked with a lot of people who were saying, well, hey, I'm growing every year, but the growth is in the top line, but they may have wrote off too many deductions, had too many deductions or expenses or things to where they actually had a negative net profit. So your profit can actually go in the reverse, right? So that means that you don't have the money there to be able to sustain a loan payment. And it also poses questions on, the stability of the company if you have several years back to back like that. So businesses are in business to generate a profit, not generate losses. So as long as you use that to help you just redirect the ship, and that's the right mindset to have. So,
Yeah, that's great.
mhm.
All right, we have another question in the Q&A box. So, someone asks, what if I don't have a business bank account yet? Does that mean I can't deduct the expenses?
Okay. So not having a business bank account is going to be problematic because where are your expenses coming from, right? So if you are a cash-based business, it's going to be a little bit harder to prove that if there's no place in which all of your expenses are coming. So you may do things a little bit more manually, but I don't encourage that at all. So get a business bank account and then make sure that everything goes there. You don't need multiple. Actually, you're going to make your bookkeeper happy. You're going to make your CPA happy if you have everything in one business bank account. So oftentimes, especially, and I'll connect this to lending, the thought is to create a relationship with multiple banks. Well, all that does is create confusion. So pick a place, that makes sense for you, that's convenient, that you like what their products. Ideally, one that does a good job serving small businesses. Park your money there, and then that's what you should do. And
Awesome. Um, any other questions? Feel free to leave them in the chat or in the Q&A box. But if that's it, then we can wrap up. Um, Nimaj, do you have any like, again, you work with so many businesses. Do you have any parting advice or thoughts, common questions that people ask you about like the link between bookkeeping and credit that you want to tell us?
yeah. So your bookkeeping is the first step in telling your financial story. Okay. And it gives you all of the insight and information that you need. So when you apply for credit, you need to be hyper aware of where you stand and apply for credit when it's time. So it's all about the right timing. So sometimes we do the right things, but we do it at the wrong time. So if you know that the qualifications for a particular lender are, have over $50,000 in annualized revenue, right? Well, if you look at your profit and loss statement and you see that you're far away from that, and you haven't done that before, you might not meet those qualifications. So it saves you a lot of like heartache and frustration when you're randomly applying, but you aren't even in a position to meet those benchmarks. So that's really one thing. And then also you're going to feel good once you tackle it on your own. So just play around with a couple transactions, even if you don't get a chance to reconcile all of your transactions. Because remember, everybody on this call, your assignment is to go from January to today, tomorrow, right? So for a lot of people, that's not going to be a ton of transactions. So use this as your playground to test it out, figure it out. And then if you actually have NAV's business credit coaching plan, then that's something that our credit coaches can talk to you about. So as the conversations are not solely geared towards lending and financing, but all of the things that NAV has to offer to help you as a small business owner. So I'll just leave that as the final parting words. Take advantage of all of the opportunity that NAV gives, all of the window to all of the information about your operation. So window to information about your operation. So that's, I'll drop the mic on that.
All right. Well, we do have one lagging question that came
Okay.
through. So
Okay.
we won't end there, but we'll end here unless someone else has a question that comes in. So Sharon asks, incorporated August 1st, 2025. Do I still have to file taxes with no revenue?
All right. So the business hasn't made any money, but it's spent money. So you have expenses. So you will just have a loss for that year. So yes.
Yeah, and then I know in the past when I've worked with lenders, they tend to like to they use tax returns to look at your time in business. Do you have any guidance there, Nimaj, about making sure that you file taxes even if you don't have revenue yet?
Yeah, because it shows a story. So maybe year one you didn't have much going on, but that shows when you started. Year two there was a modest increase. Year three you did even better. Or also the tax returns will could tell a different story. If you have a bad year, but you had a really good year, then what caused the dip in revenue? So if you refer back, if you're on top of your books, you'll be able to know, well, why did I have a a bad year? Did I have less clients? Did I lose a client? Did I make less sales? Did I spend more? Were my costs to do business more than usual? Did I have a big one-off expense? Because sometimes you may have invested in a marketing campaign, or you hired you had a legal issue, or you expensed a large piece of equipment, right? And all of those things can often eat away at how your business looks on paper. So it just gives you the insight. So you want to track as much as you can, and that keeps you compliant and it keeps you informed.
Awesome. Um, and then how much does Nav bookkeeping software cost? It comes on the build plan at $49.99 per month. So I'm gonna
Mhm.
drop it
Yep.
in the wrong
Comes on the
place.
build plan and the expand plan. Mhm.
Yes, the expand plan. And the expand plan is where you get coaching. Okay. Well, that sounds like it's everything. Thank you all for joining. We love hanging out with you. So thanks. And we'll send a follow-up after this with the slides and the recording and all of that. Nimaj, how do we get Nimaj as coach?
So for one, sign up for NAB's expand plan. So that is the $74.99 plan. So that comes with all of your business credit scores, your two personal credit scores. It comes with access to NAB's cash flow tools, which is our bookkeeping software. You get your FICO SBSS score. So if you all are looking for SBA lending. And last but not least, you get access to our team of coaches, and I'm one of the coaches. So that's how you get access to me. So if you are on a plan less than that, may consider upgrading because you'll be able to, work with our team and get these additional insights if you need some one-on-one help.
Yeah, great. Well, once again, thank you all and have a great rest of your day. We'll be sending through the recording and the slides after this so that you have access to it.
All right.
All right.
All right.
Bye.
Thank you, everyone.